Hi, I'm Charlene Laney, Certified Financial Planner and co-founder of Newmaker Financial. Today is part 5 of a 5-part series we are calling Key Investment Strategies, the ones that we advocate for here at Newmaker Financial. Now, number 5 is to rebalance your portfolio. This may sound very obvious, but you'll be surprised at how many people do not do it. So for those folks who have determined a particular asset allocation that's appropriate for them for X amount of years, say it's a 60-40 portfolio, 60% in stocks or growth assets, 40% in bonds or stability assets, and if they just leave their portfolio to do its thing, which, yes, most of the time that's a good thing, is to not obsess about the day-to-day with your portfolio, but assuming that they don't look at it for years and the stocks or growth portion has grown tremendously. Maybe it's even doubled its value over time. Well, now all of a sudden we're looking at a portfolio that's no longer that 60-40 balance, maybe something closer to 80-20 or 90-10 for their stocks to bonds ratio. And the problem with that, of course, is that depending on age and depending on how soon you need the money, it may not be a portfolio that's quite appropriate for you anymore as time goes on. And so the rebalancing of the portfolio is super important. It also keeps us accountable to buying low and selling high. So in that example of the stock market going up significantly, and maybe over the course of 1 year, the stock portion increases by 20 to 25%. Well, in that year, when you go to rebalance the portfolio, you're probably going to find that you're harvesting quite a few gains in the stocks portion. And as you do that, you're essentially selling high, right? And then you take those funds, add them to the other side of it into your bonds part of the portfolio, more than likely either didn't grow or decreased in value while stocks are going up, if general patterns hold true, which of course is not always the case, but in a perfect world that would be the case. So you're adding more to bonds while they're low, using the gains from the stocks portion. So it allows us to stay accountable to buying low and selling high. And now, as far as how often you should rebalance your portfolio, certainly not too often, but we say at least once a year, maybe even twice a year. If you start to get to more often than that, you run into the risk of making your portfolio less efficient, not allowing the assets enough time to really do their thing and to grow. So yes, number 5 is more of a maintenance type of suggestion, but of course your portfolio, the asset allocation that you have there will be determined, especially when you're working with a CFP such as us, they will be determined by a financial plan that you put together to make sure that it is appropriate, to make sure that we are rebalancing on a regular basis, and it simply has to be rooted in a plan. So I hope this has been helpful. This concludes the 5-part series for key investing strategies. And of course, these aren't things that apply to everyone all the time, but it really depends on your situation. In general, though, these are some good rules to live by with your portfolio. Let us know what questions you have, and again, we hope this has been helpful. Thanks.